fact, learning how to trade, once again, is just like learning any other discipline. A chart, once again, is no different. It's simply a roadmap of price, and once we get a clear-cut understanding of how to navigate that roadmap, we're then on our way to becoming successful as a trader. We also potentially have a long opportunity starting to develop over here on on our dollar versus franc. And I'm just checking in on the euro here to see what we've got there. It looks like we might have a little bit of a short development there. Market's starting to wake up a little bit for us. So we'll see how things develop as we move forward here. So once again, I said learning how to trade is just like learning any other discipline. What you should see on your screen now is a picture of a sheet of music. Now, for the trained eye, this sheet of music has a sense of organization and is easily understood to the trained eye, such that the individual can read these black marks on these grids and create a sense of order and understanding out of exactly what the sheet of music is saying. To the untrained eye, although there may be some sense of order to it, we have no ability to really interpret that information because we don't have the correct foundation and understanding of how to interpret the information that's in front of us. So it has somewhat of a sense of organization, but it still seems chaotic to us. And that's because we haven't trained our eyes to understand these visual cues. And so when you're looking at evaluating a training program, one of the things that you need to understand is that when evaluating a training program, you need to evaluate the training process. Because if the training process makes sense, then your performance will naturally improve over time. In other words, oftentimes when people look at our program, they always ask us questions that are not related to evaluating a trading program. They, for instance, ask us about drawdown. And drawdown is specifically related to systems-based trading. It's specifically related to position trading, trading on large time frames. It's not related to a trading methodology. It's not related to trading on a shorter time frame. Drawdown is what happens when we're trading in a trend, and that trend retraces, our market pulls back, and our account goes into a negative balance, or some of our profit is taken away. And that's why I say sometimes people may think they want to be trend traders, but the reality is their personalities are not suited to be able to effectively go through a lot of the things that a trend trader goes through. One of the things trend traders go through is they have to experience a large number of losses before market finally takes off and runs in their direction. I'm sure some of you have heard the old saying, cut your profits and let your losses, or cut your losses and let your profits run. That specifically is related to trend trading. That's my point, is not only is it's constantly commingling these strategies. When you're trading on an intraday basis, it requires a very specific formula, and it requires the correct tools and the correct terminology. And so the other thing is oftentimes people ask us about backtesting. Well, this is a rule-based trading application based on price activity. Backtesting is computer simulation designed for system trading. The reality is backtesting doesn't even work. It's proven time and time again that backtested information may produce a positive yield curve in a hypothetical scenario, but put into a real-time live market for an extended period of time, what happens is that system eventually will blow up. Because what backtesting is all computer simulation. And so what happens is they do what's called curve fitting or optimizing, so that this system will create what's called a positive equity curve. And did you know that over 90% of the programs out there have never been actively traded for an extended period of time in a real-time live market? So once again, let's get back to the training program. So when evaluating a training program, you need to evaluate the process. Because if the process makes sense, your performance will naturally follow. So in other words, back to the sheet of music. These are visual cues to the trained eye. We all learn in the same fashion. Now, we all would like to believe that we can learn things quicker than the next guy. I hear it every single day. Is what if I study extra hard, can I start to make large sums of money in a relatively short period of time? And the reality is we all learn in a similar process. Sure, we can shorten the learning curve a little bit, but we need to give ourselves a chance to assimilate the information. In other words, we learn by first understanding a concept, then given a chance to apply the concept in a real-world environment. We then need to practice it over and over to the point that it becomes second nature to us, and then we become more consistent, and then we can move on to the next concept. Similar to learning how to read this sheet of music. The first time you would try to apply or learn to read this sheet of music, you're going to be very awkward at it. But the more you see the sheet of music, the more your eyes represent the visual cues, the ability for you to become fluid and understand what this information means becomes second nature to you. To the point that the trained eye can actually hear the music playing in their mind without even playing the instrument, because they can read that sheet of music and they understand what it's telling them. They understand the nuances of the chords and the notes, and the time and the speed and the tempo, and all the things that are required to correctly play this sheet of music. And they know that the way that they increase their acumen is by getting good training, but more importantly, that training needs to be repetitive. It needs to be practicing the same information more than one time to become stronger and stronger at your skill set, so that you give yourself a chance to become conditioned, so the activity then becomes second nature. The visual cues become naturally. You understand how to correctly interpret the information by watching it for an extended period of time. So then when you see the information, you can immediately act on it because it makes sense to you. It no longer is random or chaotic. It actually is. It has a meaning to it. There's an ability to interpret that information. Looking at a chart then becomes the same process, because price creates patterns, price creates consistency. Price trades in particular based on particular values. Remember, it's a relationship of price and time. So to the untrained eye, a chart too seems random and chaotic. And so that's why we have to become so heavily reliant on indicators, because we can't trust our own judgments of what it is we're seeing, so we believe technology can do it for us. But the reality is the best trading system is the individual who understands how to correctly interpret price in the marketplace. Because once again, all trading is a relationship of price and time. In fact, if you look at all of the algorithms that drive all these popular indicators, all of them are some type of a relationship between price and time. And that's all that they are. So when we're trading on an intraday basis and we're trading on a small time frame, we can eliminate a lot of these processes, because we can understand and interpret that same relationship. In fact, here at the Trading Institute, the name of our trading program is called Thin Slice Trading. We still potentially have our short setup on the in here. I'm keeping an eye on it, as well as a potential long setup developing over here on our dollar versus franc, so we'll see how that goes. Market's starting to wake up a little bit here. And so, as I was saying, is here at the Trading Institute, we call our trading methodology Thin Slice Trading. And we call it that because we work off of a principle called Occam's razor. In other words, we want to use the thinnest slice of information. And the principle behind Occam's razor says that whenever we're doing an analytic process, we want to use the least amount of information to make the best possible decision. In other words, there have been studies done that when we're doing an analytic process, by adding on more information does not make us more accurate in our decisions. In fact, by adding on more information, what happens is it becomes a diminishing return and can create a negative impact on our decision making. In fact, what happens with traders is that's the third common pitfall, is they believe by making things more complex, they're going to be more successful at trading. Pound's waking up here too as well, as far as a potential long setup here. So we've got three potential entry points starting to develop here. We'll see what we need now is once again what we call directional confirmation, where price confirms based on the rules of our entry strategy, which we'll go into here in a little bit as we move forward in the presentation. But as I was saying it's developed is when we go through an analytic process, is that more information does not lend itself to making better trading decisions. In fact, it has a diminishing return. The reality is we work off of a principle of eliminating the unnecessary so that we may see the necessary. And that's a common problem with traders, is more time frames, more charts, more screens, more indicators. And then what happens is they're not sure what's necessary and what's unnecessary, and that once again lends itself to becoming inconsistent. And all this distills down to what I call is the 50-50 trader. That's that individual who